the world of business wasn't created to build a bunch of things that only last 5 years, right? Businesses are built because the idea is you want to go for a long period of time. You want to be a GE or you want to be an IBM and go on for a long period of time and become billions in revenue, right? And so developing that foundation is really important. I also think it's how you attract the best talent, right? I think you want to get talent to go to a company, having a really important, big, long-term mission is important. And they understand that, especially young folks really want to go work for a company where they can see themselves really being part of creating something big.
I love the way you talk about, and I think we're pretty aligned here. There's negotiating the upfront investment control structure of a deal. There's negotiating the exit and all of that. And you said, well, that's really not my thing. It's everything in between. So describe that, because I live in the in-between as well in all the work that I do.
Yeah, I should admit, first of all, I started my career as a deal guy, which makes people sort of laugh that know me. I started off at Goldman Sachs because when I came out of University of Texas, I was kind of in the mode I didn't know what I wanted to do with my life. And it seemed like a lot of smart people were going there and they wanted to talk to me. So I went to do that job. But I realized that transactions aren't my thing. And there's nothing wrong with people that are great at transactions. You need them. The investment world is full of people who know how to go in and structure really good deals, get themselves in a good position to generate a good return just based on the deal structure, and similar on the exit. But my whole career, with the exception of that time at the start of my career, has been about building companies. My skill set's knowing how to go through, set up an organization, set up a team, and help them build over a long period of time. And I'd even be more specific than what you said about how I spend my time. It's even in between board meetings. I feel like for me to be effective at working in a company, or honestly effective at doing much of anything, I really need to have my head in it. And so when we set up BuildGroup, we had a couple principles in mind. The first was we were not going to be so busy sourcing or working with so many portfolio companies that we would be a distraction to the ones that we actually had in our portfolio. And what do I mean by that? Well, I mean, you look at a lot of investors that have 20 or 30 portfolio companies and are sitting on 10 boards. It's really hard to be involved in the day to day. And I always wanted to be in the mode where the company I'm working with, I could call them, they could call me. We don't have to spend 20 minutes refreshing what's going on with the business because we've talked very recently. And there doesn't need to be any agenda. We can just have a conversation and work together. And so it feels like, even though I'm outside the company, I'm not part of the management team, I'm an investor and a board member, it does feel like I'm actually acting more as part of the management team. And so we get very engaged in working to help them build in between the meetings. And that's my experience, right? This is what I've done. And the other thing I'd say is I'm very focused on long-term value creation, not short-term value creation. And a lot of what goes on in the investing world, especially in VC, is really figuring out, hey, how do I get this to a maximum exit potential in the next 3 to 7 years? Right. And that's great. In fact, we've had a lot of our companies that exited in a pretty short period of time. But for me, whether you're trying to sell a company in the long term or sell it in the short term, you need to lay a really good platform or foundation. Because even if you end up selling after 2 or 3 years, if you can demonstrate you've built a great platform for the long term, you have a vision for the long term, you're always going to have a better exit. But for me, it's just more about the fact that I like building businesses. I like seeing them sustain and go for a long period of time. And that's where I spend my time.
Yeah, I also love operating companies, creating value. I've started 8 companies from scratch. I've had 3x, 1 9-figure, 1 8, 1 7 figures. And I've always thought that the best position to put a company in is when it comes time to sell or somebody makes an offer, keeping it is an equally good option, if not a better option, to actually selling it, which sounds like you're kind of aligned to that. Create something that's in it for the long run.
Well, anytime you put yourself in a position where you can only make one choice, you're not going to get the best outcome, right? So if you're in a position where, a buyer can see you going on your own, or selling to them, or even a funding round can see you not needing to raise funding, you're in a much better position than if you're not. But also, businesses weren't, I shouldn't say businesses. The world of business wasn't created to build a bunch of things that only last 5 years, right? Businesses are built because the idea is you want to go for a long period of time. You want to be a GE or you want to be an IBM and go on for a long period of time and become billions in revenue, right? And so developing that foundation is really important. I also think it's how you attract the best talent, right? I think you want to get talent to go to a company, having a really important, big, long-term mission is important. And they understand that, especially young folks really want to go work for a company where they can see themselves really being part of creating something big. Now, people debate me on this all the time and say, no, no, they want to go somewhere they can get rich quick. Of course, people want to make money. But if you can combine that with a long-term vision and mission, I mean, I think if you look at OpenAI and their success in recruiting a lot of folks, I know a lot of folks who've gone there. I think people, of course, see the opportunity to make a lot of money, but they love the platform they're building, the long-term vision to the company. So for me, it's all about trying to create that alignment. You can have the long term, but if the short term presents a better option for you to exit, then you can do that too.
Yeah, I've done a bit of investing. I don't have a fund, but there's probably 30 million of my own money that's out in different things, and it's just a few companies, and I want to stay in it. And as I'm looking through this, and I'm part of the local startup community here in Arizona, there's such a difference between those that are just in it to make money as fast as they can. They're selling investment. They're not talking about the problem they want to solve. I think that, and I'm curious what your take is on this, but I think that's probably why 95% of startups fail. They're not in it to create long-term sustainable value. They're in it for how can I make as much money and get out of this thing within a short.
Yeah, I think that's true. One of the things that turns me off very quickly is when I get a deck that talks about exit scenarios. I just, I don't care. And you don't know. Someone's coming to me to talk about exit scenarios. First thought that goes to my head is, well, I don't think we're thinking about an exit for 3 to 5 years. And I think you really have no idea what the market's going to look like anyway. But more importantly, why are you thinking about that? You got a lot of work to do. You got building you need to go and do. And it signals kind of the wrong mindset. I also think the Silicon Valley mindset has been, my mind, the reason why you have a lot of these companies go out of business is frankly, there's just a focus on short-term growth. The whole triple, 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 double, 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 right? Which involves spending a ton of capital, burning a ton of capital, and trying to grow. And when it doesn't work, all of a sudden the VCs may want to move out of it. You're seeing a lot of down rounds that are occurring right now that are causing companies to have problems retaining talent, et cetera, et cetera. To me, I'm much more focused on like, hey, what is a great long-term sustainable growth model that you can put in place that does preserve value? So, one of the stories I'll tell you about Rackspace, I was there from early days until after we IPO'd and a couple of years before a company ended up getting sold. And we basically had a compound annual growth rate of 50%, which a lot of people look at and say, that's not very sexy, but we got it to 2 billion in revenue. We only raised 30 million in capital. And so when we ended up going public, we made a lot of employees, a lot of money. And I think that was a story. But if you go back and look at how we talked about the business from early on, it was always kind of long-term focused. It was always to make sure that we were in control of our own destiny and always could be in a position where we wanted to go. We were lucky we had investors that were aligned with that. But even in the end, the main reason we actually went public was because the funds we were working with, they were 10, 12 years old. They were shutting down and it was time for them to get their liquidity, right? And that was what drove our IPO, not cash need, right? A lot of stories out of that I learned from as well. But yeah, no, for me, a big part of me, if you look at me in my career, I spent a long time at Rackspace. I've been doing BuildGroup now for 10 years. I'm a big believer that it takes time to build something great. And I like the process of building something great.
Yeah. I mean, it feels better to me, creating value in something that's going to last. So I 100% agree. So you, as I understand it, BuildGroup only invests in at most 2 to 3 new companies a year. What's your process for selecting those companies as you go through it?
Yeah, I would say, first of all, I don't know if we've ever done 3 in a year. I think 2 is the most we've ever done. We're very selective. I think the nice part is we do get the same amount of deal flow that most folks get. We get a lot of inbound. We have a really good network for that. The problem is because we're more selective, it's harder. And I would actually argue that our investment process looks more like a PE style diligence than a VC. And what I mean by that, we spend a lot of time really trying to understand the mechanics of the business, how they operate. And it's almost like I write the business plan all over again when we go through and do it. So the selection process for us, like kind of upfront, I'm really looking for. So first of all, we have a very simple product thesis that has evolved, but initially we started in this workflow SaaS that was really focused on data, or said differently, we now call it data enabled SaaS. So back in 2015, which were the workflow companies that had interesting data assets that you could surface back into the workflow as insights and continue to drive value creation. That has transitioned really well into the world of AI. AI is just an extension of data science. So we now call them AI enabled workflows. So look for those first and foremost. The second thing we look for is really trying to find. So to your point about finding people that are focused on the long term, one of the things I found is people who are kind of customers of their own problem, who created the company because they needed something done for themselves in a previous life. They decided that, hey, I want to build a company to solve this problem. My experience with them is they tend to be people that have a mission and they really want to go and build something great. I get to give you examples out of our portfolio now. Then just at Flow Space used to run supply chain for the Honest Company, decided there needed to be a more efficient and better way than the way 3PLs were helping to move goods in the market. And so he decided to create a whole platform around that. My experience is those types of folks are really, really good at building. And then the second thing is how we interact with them. Very early on, I don't sit with someone and ask them to go through metrics with me. I sit with them and I just start talking to them and I hear their story and I hear where they talk about. I get really excited when they start talking about their team because I think the foundation of every great SaaS company is people. It's all about people. And so I'm very interested when they talk about their team. But first thing I asked them was like, okay, tell me what your problem you're dealing with today. Maybe we just talk through it as a way to get to know each other. And those conversations help me understand really how serious they are about building long-term business. A lot of the time, the first question I get is like, well, I'm trying to raise money and I don't know how to raise money, right? That's not what I want to talk about. If someone says to me, I'm really struggling with this issue with an engineering manager that I've been trying to deal with, or we're really trying to evaluate, do we move into this new market based upon our success in this previous market, or do we double down on another offer to this customer set? Like those are the kinds of folks that get us real excited. And then we just dig into the mechanics of the company. And for us, we'd like to be the last money in. We'd like to focus on getting them to cash flow efficiency. I don't think there's any magic number to this, but we typically invest in companies when they're 3 to 8 million in revenue to get started. They are typically burning. Somewhere between there and 20 million, I'd like them to get to cash flow break even. And I certainly would like that to happen at a reasonable growth level. I don't want these things growing at 10%, but they don't have to be growing at 100% either. In the end, we want to get a good foundation, a good platform for growth, and help them figure out how to build that. So, that's been the magic of it. I would say the biggest challenge we've had is how do you do a high level of diligence at a rapid pace? And we haven't been great at that, but we do run pretty extensive diligence processes. But that's been the success so far. We've done out of the first fund we raised 330 million. It's a permanent fund, so we'll continue to invest out of that fund as we have proceeds. I think we did a total of 13 investments, but out of that, only 8 really of any size. So we have 3 partners, so you can see how engaged we've been in between in the process. And in my view is that's where we create our alpha, is really working with the companies and trying to help them scale and build. And I do think that's a differentiator at our stage as well. It's different than what you see for most VCs who invested at B or C stage. And that's also why people think of us more a little bit like a private equity model because of the engagement model.
Yeah. Yeah. I don't invest in any companies unless I'm in the middle of it in some way, the team or I am, because I want to know what's going on, and it's fun to build. So one question I have, so far, I don't, is it luck? I don't think so. And all the companies that I've started and built, I haven't had to raise $1. I was just super disciplined, early on with no money. CapEx budget in 93 was $175 when my aerospace company was crazy. And that grew to 100 million in sales and, global business and all of that over time. Super capital intensive, never had to raise money, debt financing, et cetera. And I found that as I went along and I had more and more money because of exits, I wasn't quite as smart in my decision making. Like I go a little bit faster. How do you manage the effective use of capital when you invest? Because I've seen a lot of, founders, teams, money comes in and they spend like drunken sailors, because we have it. How do you manage that in the company?
That's honestly, that has been really challenging. So if you look at when we started in 2015 was when we started making investments as individuals. And then 2018, we raised our fund. And at that time, it was a little bit easier to talk about capital efficiency. The market hadn't yet started really the boom that we saw around COVID. It's a key part of our pitch when we talk to folks about. And so we would encourage them to take as little money as possible. I think our first investment in a company called Fix Automation was $5 million. Our investment in another company called Anaconda was around the same. Those rounds got bigger, by the way, not just because of us, but because of the way the market evolved. But we've always, we even talked to companies about this idea of like, why don't we come up with a line and, you just draw it as you need it and you draw it based on a multiple and, just do something along those lines. We've always been very focused on how do you get companies to take less. It was very difficult 2020 to 2022, or maybe 19 to 21. And when if you look at our investing history, that's when we slowed down. Like we were really concerned about that. And frankly, on the cap tables we worked with, earlier investors, we were fighting this. They were very focused on, even when the market was downturn, let's solve this by burning more, trying to drive that growth higher. So, the one thing I always, focus folks on is like, okay, again, if you're only focused on the top line number and you're not concerned about the bottom line number, you're going to make bad decisions all the time, right? Because it's easy to say, yeah, I want to grow at 300% and I don't care if I burn at 500%. That's easy to do, right? And people would do that because they assume more money was going to be there. And frankly, I think a lot of entrepreneurs just do a poor job of understanding the economic impact of themselves, right? They don't look and say, oh, wait, I've got this 10 million in revenue and I'm only a 10% holder of this company right now. And I'm still burning like crazy. So I'm going to have to do more. That was, it was honestly very, very difficult to deal with that mindset. And term sheets, even after we invested, more term sheets are being thrown at our companies and they're focused on it. So a lot for me is like, okay, reminder, you're building this for the long term. Let's pick a target. Let's just say you want to get to, in 10 years, you want to get to be 200 million in revenue, 300 million in revenue. What's the CAGR look like there? Oh, it's not. You don't have to grow at 300% to make that happen. So let's think through how you go there, right? By the way, I know you want to invest a lot in just kind of going from, 2 AEs and, 4 SDRs to you want to triple that overnight. First of all, that doesn't really work. But why don't you think about what really creates value, which is your product offering? And let's think about how we invest there. That'll have a slow return profile. It's not going to necessarily happen right away, but within 36 months, you'll see the value of that investment, right? And so we would refocus folks really much more on the product side of things and get them really investing for that for the long term. And that worked pretty well. Then frankly, we were blessed with this downturn the last couple of years, where people got more serious about it because they were forced to, because all the folks that wanted to throw money at them before didn't want to throw money at them again. And people were understanding that the valuation they took 3 years before, they aren't even worth that now. They were looking at down rounds and what do we do? Unfortunately, I think that we're heading back a little bit more in the direction again of people wanting to burn like crazy. And I blame Silicon Valley for this. I mean, I just think that they think the way to, first of all, I'm in this market too, are in the business of deploying capital. Our job is to sell money, right? And unfortunately, there's more and more of that around. And the more there is, the more likely people are to burn. And to your point, like the more a company raises up front, it's, they're more likely to make really bad decisions. No one's going to sit there and be street. Hence, raise what you need for the next 12 months. Maybe the next 18 months, you have to raise again. And by the way, if you're a great company, you're not going to have trouble raising. But it is a challenge. And, it's a drug. Capital is a drug. And when you have people offering it to you and offering you terms, it's really hard to fight it. So we try to do, like I said, I try to do it on the operational side, try to help people understand that like we're here for a long period of time. Let's be reasonable at the growth rate you're trying to target. Let's make sure that we're not over investing in the go-to-market side. Let's invest in the stuff that matters, the product side of things, and we'll be okay. And in general, that's worked. But I will tell you, it's still my number one concern about this market continues to be just the way VCs throw money at these things. And ultimately they walk away from these companies that they've overfunded and it burned too much. And I hate seeing that happen too.
Yeah. Yeah. It's, interesting in that a lot of companies are raising money because this is what we're supposed to do. And I've even asked the question, what would you do with it? And they don't have a good answer. It's like, This is part of the process what we do. So why are you doing it? And I've had companies come across that, well, I really love the future. I think this is going to be incredible. And it has to be the right fit where they don't need money. It's like, you don't need capital, don't give it away. And so I always give that advice. And if they do need it, and I can help on the operations side, like it really needs to be a good fit, I think, between the investors, and the founders. And if it's not, it can really go sideways. So talk about that. I mean, how do founders think about, finding the right investors, for their business that's a great synergistic fit?
Yeah, I do think this is a big one, right? Which is if you go to, again, if you're serious about wanting to maintain control over your burn, control of your ownership, and you look at your numbers and say, all I really need to raise is 5 million, and you go to a VC and they say, well, here's a term sheet for 20 because that's the minimum we do. Walk away, just walk away. So people always ask me this question when they first talk to me, like, what's your minimum check size? And I say to them, you shouldn't ask me that question. I really don't have a minute. I do have a minimum check size. Obviously, if you run a $330 million fund and you're trying to be relatively concentrated, I can't sit here and write a bunch of $2 million checks, right? It doesn't work. I couldn't be engaged and do what we do. But I always tell them, I'm like, if all you need is 5 million and that doesn't fit, then I should walk away. You should walk away from me. What I shouldn't do is try to solve for that. You see a lot of solving on that. And as funds have got bigger and bigger, it's become a more and more of a problem. As I said, when we first started, it was normal to have a $5 million Series B, right? Just we didn't, and that changed to where Series Bs were 20 and $30 million. And you're right. People had no idea how they were going to use that money. And they were doing stupid stuff. And again, it was almost all on the go-to-market side of things. So I think that's the first thing. And then, I do think you get a real sense, when you walk through and talk to them about how they talk about their companies. One of the things I've been impressed by, I've had a couple of chances in, I don't want to use names of firms, but there's some really impressive firms out there. And there's some that I'm not so impressed with where they wanted to come into our companies. And I usually sort of play chairman role, either officially or unofficially. And I talk to the other firms. And I'm always impressed with the ones who've done diligence on the product side, the customer side, really understand the offering and the value proposition. And that's where their mind goes versus the folks that look at the numbers and say, well, I'm extrapolating from your sales numbers here and what you have in terms of your achievement on your SDRs and your AEs. And I figured we tripled the number you have there and get the similar results. And I look at them, I'm like, okay, that's not how this works in real life, but it's also not where I want you focused. I want you to understand, do you believe in the mission? Do you believe in what we're doing? Do you see the long-term value in it? And you make that connection. So, and there are firms out there that do that. A lot of great firms out there that do that. But for me, when people are really focused, especially on the go-to-market side, focused on the numbers and extrapolating out from that, that's never a great sign. And then the other thing too is like, I don't like the concept. I've often said I don't like the concept of people being coachable or not coachable, because that implies that in some ways the VC or the investor is above the entrepreneur. And I don't think about it that way. I think about this as a dialectic. You have to work together to get to a better answer. I learn equally, if not more, from the folks that I work with, especially now that I'm 10 years plus removed from being an operator. I miss out on a lot of stuff that's changed. And so to me, really understanding how you're going to work together, and can you be in a situation with a VC where they don't assume they're always right and they're not there to run things. And to be blunt with you, I was terrible at this when I started. Being an operator coming out, it was very hard for me to kind of step back. But I recognize that in the end, well, this is a really powerful situation to be in. If I can be an outside advisor, I have the luxury of not having to run things day to day, and I can engage with them in a productive way. We'll get to a better answer, especially if I can devote the time to learning about their business, to being in the business day to day. So I tell them the same thing. If you're meet with folks, you really need to find that connection. And do they feel like they sit above you, or do they feel like you feel like they sit alongside you? And there's a big difference in my mind.
So a question about staying enough in the game. For me, currently I'm running 2 companies as CEO, and within a year I'll have a CEO in one of them. I've got a few companies I'm invested in, so my team's actively involved, and so am I. I have 3 CEO groups where philosophically what I believe is that every CEO's job is to continually and responsibly increase the value of their business, and every business is different. And that's our mindset. That keeps me fully in the game. I feel like I'm taking my brain to the gym every single day. It's so much fun. How do you stay in the game to where you don't, because there's a lot of experts out there that couldn't do the thing they're talking about to save themselves in the real world.
Right. Yeah. Very early on, I had one of my first board meetings. There was a young, I don't know, VP, principal, whatever, from another firm, as a board observer, and was making a comment about LTV to CAC. And so we just got to make that ratio better. And I was kind of annoyed at this point, listening to folks talk about this. And I turned to him, I go, well, what would you do? And he goes, well, I would really focus on getting the CAC down. I said, okay, well, do you have suggestions? Because that's actually the work, right? Is to figure out what we need to go and do on that. And so I do feel like that's the case. I feel like a lot of folks will opine on this and not have experience. I do. So first of all, from the portfolio, because I'm so engaged with it, I'm not in it, right? To me, I tell people, you could say you're learning, but unless you actually are responsible for driving the ship forward, the learning is not the same, right? But I'm in it that way day to day. Lately, I've been obsessed with the new tools that are coming out, the AI tools on the operational side of things. in particular on the go-to-market side of things. I've been playing around a ton with those. I'm actually actively involved in implementing some AI-enabled go-to-market workflows at two of our portfolio companies right now, because I think these tools are really important to understand. Not just the tools themselves, but a lot about what we know about the SaaS model around go-to-market is going to change. Salesforce kicked it all off 20 plus years ago with the predictable revenue model for SaaS, and to a great extent, the genome has been marked for that. I think these new automation tools are really changing things quite a bit. And for me, it's been a real focus on going to learn how those work. And the only way to do those is go and experiment with them. So I've got a little effort that I'm doing personally around that. I've also been doing it on some of my personal investing side of things, trying to find ways to implement these at our portfolio companies. But also I've actually played roles at all of our portfolio companies. I was head of sales. I've been head of product, going in there to do that work. Now, what I would describe that as being is it's more of a people job than it is sort of a tools job or a process job. A lot of it's in there trying to get organizations scaling in the right way with the people they have. Now I'm very focused on the tools and understand these modern tools and how they work, and trying to do so at really rapid fire scale. And to a great extent, I've never been more excited about the market. I also think it's really interesting because I think we're in a world where companies may not need to raise a whole lot of money anymore because of these tools. I think, frankly, Series B, C, and beyond, folks in my realm might be in a lot of trouble going forward because I do think the fact is you might be able to grow at a reasonable pace and do it at relatively low marginal cost because of what these tools can do. We're playing around with AI SDR tools, automated, real automated demo tools, different things that I think will actually speed up and accelerate growth at the same time bringing costs way down. So we're really early in the game on that, but I find this stuff really exciting. Then obviously on the coding side of things, spent a lot of time understanding how all that's going to change as well, the support side, but in particular, the go-to-market side's got me super excited right now.
Yeah, that's great. I'm worried about all the additional noise in the last year and a half or so as AI is coming up. I'm getting flooded with literally 10 times the marketing, sales, activity coming in.
Yeah.
What do you believe anymore? The noise is crazy, and most of the companies that I work with, the folks in my CEO groups, it's completely changed the game. So what was working isn't working. Everybody's scrambling along those lines. What advice do you have there for?
Yeah, I think the outbounding right now is tough because I think a lot of these tools that have enabled kind of broader and quicker reach are flooding people. I do think the curation of the inbound is where the real opportunity is. So a lot of what we're trying to do right now, just think about better dialers for your staff. The ability to have customers interact with an agent first, if not exclusively. The ability to have, again, as I gave demos as an example, not wait for an AE to have a Calendly availability to do a demo, but have one kind of custom built for you on the fly. So for us, it's been more dealing with sort of the inbound and the curation of the inbound. I think the outbound's tough because I do think the amount of outbounding that's going on right now, and even the personalization of it has gotten a lot better. So yeah, it's funny you say that because we were having a conversation today about this for us. Like, as we're reaching out to companies, what does it look like? And one of my team members would say, right now, I'd say the noise is a lot higher, not just because uh, the market is down right now. And so a lot of people have been, really kind of hammering same companies over and over, but the quality of the outreach seems to be higher. So it feels like people are able to do better, quicker research, get more messages out to folks, which just makes it harder to stand out. So I'm going back to the old tool method, which is the things I really care about. I either pick up the phone and call or send a direct email to. That's not a scalable thing for most folks, but for our companies, the way I think about it is really focus on what you can do with these tools on the inbound, the stuff that's already coming into you and your walls and how you get that to go faster. The outbounding side's tough right now.
Yeah. So trust is really big. So I think AI can make everybody look better, but I wonder on average, are they really any better across the board? And so I have a hard time believing anything because everybody says they're the best that ever was in this particular space. And so I'm kind of coming down to managing and leveraging the trusted relationship-based network that you have to kind of swagger out to get to others. I feel like that's where it's going to go because it's going to be so hard to believe any of this stuff that you read or see.
Yeah. It's, it's interesting. The world of SaaS is not as in favor these days. And so, a lot of what I still go after with folks is simple messaging that I've been doing for the last 10 years. And in particular, trying to find SaaS companies that are not, I don't want to use the word AI whitewashing, but aren't spending a lot of time talking about AI. I want to put AI on all the companies we work with on the product side of things. But first and foremost for me is I want to find a really good workflow company with a really good data asset. And then try to stand out on that. I do think that, I was talking earlier today with folks about agentic AI, for example, because there's so much written about that and so much investing going into that. I think that's a really hard space right now, and I get a ton of inbound on those because you're basically trying to win with a better trained LLM, and I think that having a better trained LLM is hard. It's a hard game to go and play. You ultimately have to have a good data asset behind it. And I think there's a whole lot of these companies that are popping up today to in the legal space, the accounting space, you name it, that are going to go out of business, but I'm getting flooded by them. For me, I'm just trying to go back and looking at the stuff that I've looked at for 20 years, just good old traditional SaaS workflows where we can put AI on top of them and deliver a better product.
Yeah. Yeah. The tools are incredible. I've got a number of attorney friends that are saying, they're getting 10 hours worth of work done in 30 to 40 minutes. It's amazing what's happening in the transformation here. When it comes to AI, there's still a lot of, founders, business leaders that don't really understand it. What's your advice for how to think about even, getting started, getting your feet a little bit wet and then working into, what's possible with these tools?
Yeah, I think, people, whenever you get new technology, people kind of take old models and apply it against it. So if you look at how most people are using AI today, it's basically a glorified search engine. That's okay. I mean, it works really well for that. What I try to get people to do is start to say, okay, one of the things that actually it's really good at, is actually getting you the right data out of you. And so, I actually build quite a few custom GPTs, or I guess in the world like Claude, think of them as projects, and I give them personas, right? And so one of the first things I talk to people about, and I've done this with my 16-year-old son, I've done it with my wife, I've done it with friends that run very traditional businesses is, hey, let's think about what you're trying to accomplish and let's see if we can't write a persona to help you with that. So example I'll give you, because I'm working, my son's trying to create a business to make fishing lures and trying to build a web app. And so what I did is I created a product manager GPT for him and basically loaded up a whole bunch of product requirements documents and description of product manager job and a little bit about what he's trying to do. And then I gave it the mission of, your job is to help create a product requirements definition for him for his application. And I said, now let it ask you questions and go from there. Right. So for me, a lot of it is maybe what you want to do if you're a CEO is maybe you want to model out your investor. Like maybe you want to create a version of me that you can ask questions to. So before you go to a board meeting, you can determine what I'm likely to ask. Or maybe you want to try to create a strategy consultant that knows a lot about this space and going to really focus on helping you refine your strategy. So a lot of it to me is about starting with this idea of like, okay, let me think about this as an alternative personality. I want to give it a personality and a role, and I want to interact with it. And a lot of the value is going to come from what it extracts from me more than what I ask it. And that's how we play around with it. I also did a demo where I showed someone I'd created, two GPTs to serve as an investment committee. And I gave one the role of being for it and the other role of being against it. And I gave them very specifically product. I said, your product manager, you're focused on the product side of this only. And I let them talk to each other. And I just showed her like, look, if you really focus on, trying to build these things so that they're not just general purpose, tailored to what you're looking for, assume that a lot of the data is going to come from you and not from it, you'll get a lot of value out of it. And these things are so easy to get started. They're just really easy to play around with. And, most people just haven't put the time into it. But it's not like, 10 years ago, you wanted to understand data science. That wasn't easy. Like trying to create your own data science artifact was not an easy thing to do. It's so easy to get started in this stuff. And a lot of people just don't know how. So trying to help them frame it is one thing I spend time doing.
Yeah. And if I remember right, didn't it help your wife, launch and sustain a podcast?
Yeah. So we're in the process right now of trying to do a joint one, which is, maybe you give me advice on this, but the whole idea is the negative split life, which is how do you run as faster in the second half of your life as you do the first half? Because I'm at the stage where, people talk about retirement. And to me, that's a 4-letter word. I hate hearing it. I also hate the thought of slowing down when it comes to athletics. So we've been having a whole topic about how we write this, but I also did, I showed her how to do this. Sorry, my wife hoping doesn't kill me for this, but she was trying to pack last minute and we went to Ireland for a trip. And she asked, like, do you have, and she's like, types in a question. I go, how about this? How about you just take it in, turn on the video, show it your closet, tell it with a bit where you're going and ask them if it has recommendations. And sure enough, it did. It went through and said, yeah. And so, I said, I just try to give her some different use cases. But part of what I try to get people to do is just get out of the frame of what you're thinking, right? Get out of that search engine mindset and try different things out. So she and I have been working on a podcast stuff, and a lot of it's been deep research on the topics. A lot of it has been kind of trying to think about the questions. And I think we're getting close to having 10 episodes ready to go. But yeah, AI has been a big part of that. And I've also told her I want to do a whole thing on how she's using AI now to organize her life. She's really gotten obsessed with how to use it around sports too. So, hi, honey, if you're listening.
Yeah, I think it's amazing. And then I've heard you talk about rather than just tools to improve workflow, AI can be super useful in making recommendations to your customers. So it feels like it's and even internal team members, it feels like it's very proactive in giving you ideas and therefore creating even more value faster.
Yeah, if you think about all the different tools you have as a product manager to listen in on what customers are doing and watch live sessions of it, the ability to quickly process that with AI is fantastic. Even if we were talking about the front end about having like an AI SDR, even if you let AI listen in on the conversation with the customer, yeah. One thing that's nice about AI is, if I think about an SDR has incentives. In the end, their job is the way they get paid is to get an AE to accept a lead, usually, right? If you have you have a chat sitting alongside it, they're listening to the customer, they're unemotional, they're actually pretty decent at understanding intent, emotion, and getting facts. So imagine if you're an AE, even if all you're doing is collecting data and you're getting a quick summary of like, here's what the customer cares about. Here's how I'd rate them in terms of buying intent based upon all the previous conversations I've been trained upon. Here's where I think you should prioritize it. It's really, really powerful. So, there's different ways to insert it. Actually, you'll find sales reps who use this stuff now too. They will on their own use this to process calls and then get an idea of whether or not someone's really live or not. And one of the fun things to do, which I don't get the luxury of doing because I don't sit in a company, is to walk around a company and just ask these simple questions. I used to do this all the time with my developers when I was at Rackspace or working on OpenStack. What are you using? Why are you using that? Show me all the tools. Anything interesting you've seen recently? Anything you're using that your colleagues hate that you're using? And I would do the same thing with AI right now. I'd want to walk around and understand how people are using it and seeing the adoption. That's the one thing I don't get as much of my job today, which I hate. I have to call them and say, hey, can you tell me about what you're doing? But yeah, a lot of it's just getting around and playing around with it.
And a simplified, I guess, overview, what I heard you just say is, hey, we want to achieve this outcome. Here's all the stuff we're doing. Give me recommendations on how to organize it better to achieve the outcome faster.
Yeah. Yeah. One thing you can do, take a deck you're putting together a board deck and it says our goal is to hit, pick your number, $30 million next year in ARR. Load the data in, ask the question. It goes, what evidence do you see in here that they presented that they can hit the 30 million? Where do you see the risks? And usually get some stuff back that's good. And people will look at it and say, okay, well, what should I dig further in that? So I always did that as a simple test. Load something in, if you can give it some training data, like if you can give it something more than just like randomly load a deck and say, analyze it for me, you're not going to get as good a result as you get some background and give it some other purpose. But just start doing that and see what it comes up with. And measure goals. I use it quite a bit, when I get decks, and like anyone else now, I do read stuff eventually, but almost everything I get now, I load up to read through. I have some GPTs that actually will help summarize stuff in a specific format for me. And I think it's getting better and better. I shouldn't say I'm getting better and better at prompting it to get the right data out. Cause a lot of this is just understanding that piece of it, but you just got to start doing it.
Yeah. What would your advice be for the listeners on trusting their data with AI? Because one of the concerns I get is, hey, if we have it look at everything we're doing to optimize, how do we know that 1,000 other folks or more won't have access to it someday?
Yeah, that's not an easy answer. And to be quite honest, I've kind of avoided it personally. Obviously the easiest answer is, and you get it to the enterprise tiers, you can negotiate terms that work for, that they're not going to train the model on your data. Now, you got to believe that's true or not. I don't know. Um, the way I would describe it is I think the chances of stuff leaking out that's confidential are relatively small, but the chances it learns something from you that could be valuable to somebody else that you would prefer them not to know, a more generic value, it's going to be there because in the end, these models are trying to make themselves smarter for all kinds of edge cases and use cases, right? And so if you have something interesting they can learn from, it's going to get extracted and use someone else. It doesn't mean that they're going to be able to, someone's going to go into a system and say, oh, I learned that Build Group Company A's revenue is this, right? You can't go and query that, but it might have learned something from my interactions from it that could spill out into another company. I'm just one of those people where the technology to me is so powerful. I haven't worried as much about that, but I don't think the data privacy stuff is solved yet, with the exception of spending a lot of money on it. We had a company, you mentioned legal, we had a company called Casetext, which was in the legal AI space. It sold to Thomson Reuters. And the way they solved this was they ran private instances of OpenAI. I do think I do think the world of open source is going to make it easier to build and run your own models, hopefully at lower and lower costs as we go forward. That's the only way to assure these things are private. Anytime you're working on these big platforms, I don't think there's any easy way to do it. But it's the same thing I felt about Gmail for a long time. We use Google internally, and theoretically, as an enterprise customer, they're not using my data, but I don't believe that. I don't believe that for a second.
Yeah, and from your experience, the AI companies, they're taking it serious, the privacy of your data. So they're learning generically, but they're really hopefully taking it very serious, not to let your personal or private information get out.
Yeah, well, I think the first thing to do is the companies that are built on top of the foundational model companies, you got to look at their privacy policies, right? And make sure that they're doing the right thing. And then you have to look at the underlying causes. But, I do pay close attention for examples of where confidential information is leaking out. You don't see a lot of that. All you see is that it's being used for training data. But yeah, I mean, unfortunately, I think we've been in this world now for a while with cloud data in general. And I think this is just a continuation of that, unfortunately. So I wish I could tell people you have high confidence in it, but I don't. But I'm not sure there's an alternative. I think the power of these tools is there. And, again, I think the best alternatives are going to be when open source is available and you can run these things on your own. And you can do so efficiently at low cost. Either you can do it, or I'm sure there'll be service providers who stand up that'll be really focused on doing that and doing it with a high level of trust. We're just not there yet.
Yeah. I'm looking forward to that day for sure. All
Yeah.
right. So I wrote a book a number of years ago called Your Most Important Number. And it's this mind management system, which stands for most important number in drivers. Mm-hmm. So having an operating methodology i.e. a common way of creating value within an organization, I think is wildly important. There's so many different systems out there. I even had Jack Welch in 2011 tell me what I developed was the best business management system he'd ever seen. And he became my business partner in my consulting company until he passed. And wow. So I'm really big on that. So I'm curious, and I looked at your team in BuildGroup, and they're all essentially operators, and we built it for that reason. Do you care what the operating system is, or is it just they have to have one, or what kind of influence?
Oh yeah. Yeah, I'll tell you one thing that we do quite a bit, that I learned is, just getting people strategically aligned is a challenge at this stage. So, very few people have actually written their strategy down. And I know that sounds sort of trite, but I think it's actually really important. And it doesn't have to be a big, long document. But I think you need to spend, 2 to 5 pages writing down what you're trying to get done this year and long term. Like what is your real mission and where you're trying to go with it? And I think that document serves as the basis for a lot of things. The first thing is you share that with your management team and make sure your management team's aligned with it. You got to share that with your board and make sure your board's aligned with it. And then it just needs to be sort of a touchstone that you kind of guide yourself through the year with. Probably needs to be revisited every single year as you go, but it's there. And from that flows your operating plan, right? Which is how do you decide where your priorities are going to be if you don't know what your strategy is? So you got to lay that out. And then from that flows your budget. And it's interesting because one of the things I noticed when I first started in this business, if I work backwards, a lot of companies didn't even really have official budgets. And as a result, they also didn't really have operating plans. They just kind of ran things in an agile operating method, and they had no strategy. They had a strategy document, which was really their funding document, what they used to raise money, but not an operating strategy document. And so I try to get that in place. And also, I figured that you also find on a board that there's always a little bit of difference in what a company is trying to do. And that's a dangerous place to be. And so, and I'm subject to this too. I'll drift off on what the strategy is. And so I always tell the CEO, you have the document. When one of us reaches out to you with an idea for, hey, why don't you partner with X, or why don't we go after this market Y? You have the strategy document and you look at it. And if it fits with the strategy, you go, yeah, that's interesting. We're going to look at that and we'll talk about the next board meeting. If it doesn't, you send it back to them with the document and say, great idea. I reviewed our strategy document. I don't think it fits. Do you agree? And if it doesn't fit, should we revisit the strategy? Right. And it's just, to me, it's a way to keep everything aligned and making sure you're the right decision. So that's a really simple model that I follow, is just kind of starting with that. And then in terms of like how each company operates, they all operate a little bit differently. And I try not to, one thing I try not to do is be like a Vista, where there's a very set series of playbooks and the way to run a company. I don't try to do things like that. I try to do things a little bit more malleable. We certainly have strong opinions on how things should be done. If you're targeting SMB or if you're targeting enterprise, and depending on the product type that you're building, we have views on that. But in general, I try to be really flexible, and try to focus really on what I think I can really affect, which is strategic alignment all the way down to the execution plan from that.
Hmm. I have a hard time with startups and even SMEs seeing a basic business model that actually makes sense, like that they haven't built it. And the CEOs can't even really describe it. And
Right.
that's so foundational to everything. Like, do you have something here?
Right. It's funny. I told people, one of the things I encourage CEOs to do is like the budget process. If you do it right, you'll understand how your business works better. Right. So like all these numbers that you're talking about, a lot of times you've relied on either you have a full-time finance person, or if you don't, you've relied on other people to put it together, and you treat it as a reporting function. And I say, I actually view it as an interesting conversation function, because you can go and sit down and have a conversation with your head of sales, your head of marketing, everybody, and get everyone aligned and understand the mechanics of how the business works. And I always describe it to them. That's what I do. When you send me a model, like if you send a traditional investor a model, I think the first thing they do is just look at the metrics. Of course, I look at the metrics, but the first thing I want to understand is everything behind it. Like, okay, let me understand the components of it, how it operates, and then ask a lot of questions around that. And so I push really hard on that with folks. And I say, look, trust me, like sitting and putting together a budget in and of itself as an activity is not the funnest thing in the world. But getting a better idea on the levers of your business is really important. And it also opens up really good conversations with your management team if you do it right. It gets people really involved in the success of the business. But, if you sit down with a head of sales and, they don't really understand the economics of the business, I mean, how are you not going to burn? Right. But if a head of sales understands the economics of the business, and what they're doing, then maybe you're going to be in a better position to be aligned to get that burned down. So a lot of times I don't find that that's the case.
Yeah. Well, I actually love the business model creation and refinement process, because that is your business. It's the potential for future profits, return, impact, everything that goes in it, which levers have and it just improves decision making across the board. And even if the senior team gets it, I think we should be educating leaders throughout the organization. And we have maybe 10 minutes left here, and I wish I had about 4 more hours with you. This is really interesting for me. Building a team. I've heard you talk about that, and building the right team is everything. I mean, that's the people, the leaders, from which all the value is created and how well they work together. What are some high level thoughts on building the team, and how do you know it? You actually have the team, because I see a number of folks wait way too long before they get somebody off that isn't right for the team.
Yeah, that, by the way, is the number one challenge. People have a hard time. Even early stage companies, I've always been surprised at how hard it is for them to remove folks, and decide to move on. But, in essence, what I always tell folks is we invest at the stage where the real risk is shifting from product market fit to execution, right? Because they've got 3 to 8 million in revenue. They've got an initial product market fit figured out. It's obviously going to evolve over time, but they're probably not going to go out of business because of that issue. They're going to go out of business because they misexecute. And why are you going to misexecute? You've got the wrong people. Execution is all about people. So a lot of folks will spend, we celebrate the CEO, we celebrate the founder, and clearly they're the most important person in the organization. But for me, a big part of it is building the team underneath it, and helping the person figure out how to do that. Some CEOs are really good at hiring around their blind spots and hiring people that are not just a compliment to them, but can challenge them in good ways. Some are not. Really helping. And it said more importantly, the ones we work with, even if they're blind to it, hopefully they're willing to work with us to help figure out who those right teams are. But for me, it's finding a leader that is very focused on people, that's very focused on bringing in the right people, and making those quick decisions when it's not working or when it is working to double down on them and give them an opportunity to go faster. But we spend a lot of time talking about people and trying to help evaluate it. I'm a big believer that people join companies first and foremost for the culture and the opportunity. I think you lose people because of culture and opportunity. I think everyone gets so focused on the money and the compensation. And of course, money and compensation is an important thing, but I don't think it's the number one driver of building a great company. You need to come up with a mission. We used to have a saying at Rackspace, everyone wants to be a member of a winning team on an inspired mission. And I think that's very true. I think people really do want to be a part of something important. So we work to make sure that the mission is clear. You're recruiting people who are very mission oriented, who want to be a part of that. You're making sure you're treating them fairly in terms of the compensation, and you make sure that they see a path. And part of that path is also understanding that, hey, if I perform, there's an opportunity here for me. But if I have a peer that's not performing, you're going to make the hard step to get them out. Because high performers don't want to be around folks that aren't high performers. So getting all that culture in place is really important. At this stage of company, some CEOs, even if they're really good leaders and good culture folks, are so focused on the day to day, they often miss out on this. And I feel like this is an area we can spend a lot of time. And I do spend, for most of my companies, I spend a lot of time with the leadership team below. We know, which initially I had to explain to CEOs, when I'm doing this is not because I'm trying to go around you. I'm trying to help you and making sure they feel like they have good contact. And plus, I'm a whole other set of ears. And what I'm really listening for is there stuff that you're not hearing or not getting back to you that you need to be aware of in the organization or with particular individuals or teams that you should hear about. And again, it's also for me a big part of being a part of their team, and not just some random guy that comes in once a quarter, sees the management team for dinner and then goes away. I want to be a part of it so that they open up to me and I can help them with it as well. But in the end, trying to build a really good team is important. If you look at also the history of most companies, and we do celebrate the founders, but most companies do have to make a CEO founder transition somewhere by the time they get to 20 or 30 million in revenue, either because that founder just doesn't want to do that work anymore. They really want to focus on product or focus on customers, or they just don't want to do the scale, or it's not their skill set and you have to work with them to kind of move aside. So almost in every case, you're looking at having to bring someone else in either to be the CEO or maybe a strong president. And I do feel like that's a big part of our job is how to make that happen. Ideally, you're grooming them you're grooming them inside the organization over time, as opposed to hiring from the outside. And so trying to identify those folks and work with them early on is really important too. But, it's been our experience for most of our companies, those transitions have happened. CEOs decide they want to step aside and bring someone else in to run it. And those transitions can be really hard. And you have to think through them and making sure you do them right. And for me, the longer term you have to plan that, the better.
Yeah, and sometimes they need to step out of the way, but they don't want to for a number of reasons. And I share what I've heard you say. Always do what's best for the enterprise, for the mission, what we're doing,
Yeah.
what's best for you, but structured right. But there's some that just have to be seen a certain way and in a certain place. The way I think about is the team right. I've got everything from overall awareness. So you're starting with marketing. How do people even know we're here? And you go through this value chain flow, marketing, qualified leads, sales, closing, onboarding, product service, ongoing customer experience. I want somebody capable of owning all of those and not one of those. The weak link's going to move around constantly.
Yeah.
But when it does drop and one's a weak link, it gets back on track because they're super That's how I know I've got the team right. And then there's a support structure for all of that too. How do you know in your portfolio companies that the team's right?
Oh, I love your frame for that. I was going to talk about it as being you're doing well as long as everyone cares about the name on the front of the jersey. You're doing poorly when it switches to the back. And the back to me is the function. When people start thinking about their function and not the overall success of the company, and that can happen at a really early stage, right? So to me, it's about making sure that you have a team that when there's a problem, it's jointly owned. or even more important, when someone sees a problem, doesn't matter whose team it's on, they're going to jump on it and try to figure out how to solve it. Because in the end, it doesn't matter what their function is. All they care about is the overall success of the company. And so I think where you get into problems with that is when you're out recruiting and you're trying to recruit a new head of marketing, when you over rotate on that, as opposed to, I want to hire someone to spearhead marketing in this company, but let me tell you about the company and the mission first, and get you excited about that. And by the way, I may need you to not be marketing for it. I may need you to do some customer success for a bit or do some other thing. You want people to have that flexibility. If someone comes in and really just wants to do their role, they're going to be a poor fit. So to your point, I think about it as when I'm interviewing, like, hey, let's just assume that we needed some help over here. Would you be willing to go and do something like that? But this is, by the way, my career story, right? I've done all kinds of stuff and I've moved around because in the end, I just cared about the success of the company. And again, even with the CEO, we are just talking about CEO transitions. I say the same thing. Like, you and I, as fiduciaries in this company, should care more about its success than our titles, our roles, what have you. So if it's best for me to leave the board for the success of the company, I'm out. I'm gone. If it's best for the company that you step aside as CEO or stay as CEO, that's what should happen. But it should be the same down the management team. And I do feel like a lot of times where CEOs fail on this is they hire for the function and they're not hiring for the team member. And you do need people that are really flexible. It doesn't mean that, someone that's your head of sales is going to be great at running engineering, but I certainly feel like they can come in and help contribute. And one of the ways they can help contribute is spend time with the engineering team to really help them prioritize stuff in the right way. Or when there's an issue coming up with a customer, make sure they're digging in with them to help solve it, as opposed to pointing blame at the engineers for prioritizing things wrong, et cetera. So, to me, I think your frame is actually the perfect way to think about it.
Yeah, thank you. Yeah, it's always been that way. Do what's best for the entity. That'll be what's best for me. And I was just thinking as you were talking, there isn't one company I started where it wasn't at least 5 years before I was around the highest paid person in the company. And it was never out of whatever the a board would approve as a range for CEO pay. I
Right.
always had the majority of the companies, so my
Yeah.
I did really well. But that drove a lot of I would say positive, productive energy in the company, because everybody said, "Wow, our CEO isn't just scraping everything off we make," and I would give everybody a percentage of whatever we did make. So it was a pretty cool environment. To your point.
Yeah, one thing we do here at BuildGroup, it is a company, right? And I've never managed investment professionals. It's a new thing for me. They're in some ways different personalities than you would have at an operating company, but we do a lot of things the same way. One is open budgets, so people know where we spend our money, and that's really kind of unusual. You don't see that in a lot of firms, and so I have the same conversations I have with my staff that I would have with any other person, which is they come to me and want more funds. I pull up the budget and say, well, let's look at this. So we're in a sort of a fixed fee structure, right? We only get so much for fees. It doesn't go up or down unless we raise more money. So we have a fixed budget. We're at that cap right now. So what do you propose we do? Should we spend less in this area? Should we all take a pay cut? How do we think about these things? And it's interesting, the team that I've worked with, they've never done this before, and I found it really interesting because it's my way of getting them a buy into the business. I remember I had a conversation early on with someone where they had a proposal basically, only way to fund it was for it to come out of my pocket. And they were afraid to say it. I go, don't be afraid to say it. I go, I don't, if I need to write another check in, that's fine. I just want you to understand that that's what's happening. Right. And so kind of go through and understand that. But that's the way I get buy into this team, right? Which is like, I want y'all to be a part of it. I want y'all to think about how all this stuff works, so you can operate the business better. And by the way, our team is not structured this way. My finance team, the people that have never worked at a company, I try to get to work at companies. I've lost 2 team members that went full time to companies because they liked it so much. And so I work really hard to not just have them work at, for the companies doing models and stuff. I actually want them to go there and work. And if I can get them outside of finance, even better. I've tried really hard to at least make sure that if you go over there, if your skill set's finance, do something akin to a deal desk. Do something, to help support the sales side of things. Don't just be a modeler. But for me, I want my team to also be able to kind of wear all hat. I want you to source, but I want you to be able to work in companies. I have to have me and my operating team have to be better at understanding the deal mechanics and how to source and do all that kind of work. So we try to run it the same way here. We're a small team, so we don't have a choice either. But by the way, it's more fun. Like I've never considered myself a functionary. Never been one of those things I've ever wanted to say, like, I'm just a specialist at this. I feel like I'm a much better person because I can do a wider range of things, even if I can't do any one thing specifically super deep, but it's just more enjoyable. And for me, I feel like it leads to better results for our firm too.
Yeah, love that. I've always done open book management. Everybody can see everything. I don't care what the position is. Even folks doing, janitorial, everybody can see everything. They don't
Yeah.
make better decisions. So I've heard you say this too, and this is the last question, and we'll get out of here. Um, Anything can be fixed, but maybe some shouldn't be. So I've got one of the companies I'm running as CEO. I was called in by a board May of last year, and they said, "What do we do?" And I said, "Well, that didn't work, but I can take some of your resources and I can build this, which is completely different." And so here I'm a year later, and I have a clear path, and I'm super excited about it. Um, and I think every company can be fixed, even if it's something completely different. How do you think about that? And then when do you just say it's not worth it? Maybe that's too big of a question.
No, it's a good question. If you look at the way historically most firms work is as they get long tail, the companies they have left are their trouble companies, right? Because they tend to have a hard time making a decision on what to do with them. It's either the ones that are really successful, they're just kind of keep going, or the ones they're having the most difficulty with. For me, the way I think about, and the other thing I'd say about it is for most VCs, it's kind of a one or a zero. You're either doing really well and they're happy with you, engaged with you, or you're not and they don't. They're not really there to help. So the way I typically have approached this with our companies is I try to be really objective about the situation. And again, in my mind, with the companies we work with, it's not my company. I'm there as a backer of them. I'm going to stick. The commitment I made to them is as long as you want to go, I'll be involved. Now, it may get contentious, right? Because in the end, if things aren't going well and we're not making good decisions, I'm a fiduciary as well. I have to kind of drive things, but we'll keep going. But what try to help folks understand is, it's your time too, right? You only got so much time on this earth. As you look at this opportunity, if you're truly realistic with yourselves, is it going to go in the right direction? And how do you kind of frame something like that? And I, usually try to sit down and say, well, first of all, without me in the room, why don't you just sit down and look at your growth story and tell yourself, do you really believe this? Don't sell yourself on it. Do you really believe it? What has to happen to make that happen? Have you had a conversation with your spouse? Have you had a conversation with others? How do they see you and what they feel like you, my guess is you're probably having conversations with them about this sucks and it's time to do something else. Now we've been lucky in that we haven't had to shut a company down, but I've certainly had companies that have not performed as well. And a lot of what I've tried to do is kind of counsel them through how to think through what to do with it. But in the end, it's just a matter of, do you want to invest more of your own personal time in this thing, or is there a better use of time? And then from a financial perspective, you're always better off making a decision to sell at the earliest possible opportunity when you realize it's time than to wait. Because once you get to that point, value creation is only going down. The best time to sell a company, the absolute best time is when it's at its peak performance. It's even better when it's at your peak performance and you look forward and say, I don't know what the next act is. And no one else does either, but they all believe it's going to keep doing this. So now I need to exit. Unfortunately, most people don't recognize that they're high. They convince themselves that there's still this big opportunity. And then it starts going like this. The further you get down that curve, the harder it gets. So to me, it's just you're really trying to help people understand that you've reached that apex and it's time to kind of exit. And we do I have simple metrics for this we use with our companies. If you're being offered if you're trying to sell the company, if someone offers you what you think it's going to be worth in 3 years, that's an easy decision. Take it. Because it's very hard to know what something's going to be really worth in 3 years. We go through little metrics like that. But in the end, it's just for me, it's helping people understand you only have so much time on this earth. Do you really feel like this is the best return on your time or not? And making it personal like that usually helps in the process.
Yeah, makes a lot of sense. My biggest exit, I wasn't looking to sell. They ran at us a few times, and our deal was around 21.6x of EBITDA in a market where most didn't get more than 6 or 7. So okay, well this makes sense, and I can go do other cool things I want to do.
Yeah.
So yeah, 100%. And wrapping up, are there any last thoughts you want to leave with our listeners, or anything that stood out in our conversation with you?
No, it's interesting. I think we're in a really interesting market right now. I'm both excited and we talked about the tools that are coming out. And I really do encourage people need to go figure out how these tools work, because I do think that a lot of things about how businesses operate are going to get rewritten based on what the capabilities of these tools are. And we don't have a choice. They're out there. People got to figure out how to use them. I think that's one thing. The second thing is I'm starting to become increasingly optimistic that, we have another generation of entrepreneurs that have finally been through a downturn and hopefully learned from it a little bit. The market's been really rough. I think the best, it's really easy to lead during boom times. It's harder to lead during bust times, but you learn a lot more and you become much better leader and more disciplined. I feel like we've got a good crop of those now, and I'm hoping that we can see some great companies coming out of that. And then just, I think this people conversation is a big one. To me, again, the best entrepreneurs early on are really focused on building those great teams. And again, as you're thinking through, your product, your market and everything else, and they need a great team to deliver it. And really thinking through those and getting a right partner to help build that's really important. And again, for us at Build Group, as we are starting to go to our next chapter and we're doing our next thing, I'm in that process now of thinking about the team that we need to continue to build to evolve it and grow. And again, I think that's a big part of what people should do. And by the way, right now, because of the turnover we've seen with a lot of companies, there's great talent out in the market that's ready to go and work. And we're trying to take advantage of that in our portfolio companies too. So yeah, really it. Enjoyed the conversation.
Yeah, I did as well. And I love the model of Build Group. If our listeners want to learn more about your work or connect with you, how can they do that?
Jim@buildgroup.com. And because I run our IT, I get the catch-alls as well. So you can send it to fisherman@buildgroup.com and it comes to me as well. But Jim@buildgroup.com or on LinkedIn. I'm happy to chat anytime. Love having these conversations.
All right. Well, thank you again, Jim. This has been fantastic for me.
Yeah, thank you. I really appreciate it.
Yeah. And this has been the Show Your Value podcast. If you got some value out of today's episode, please leave a review and leave your thoughts if you have any. And until next time, show your value to the world.